Welcome everybody to another show here at Commercial Property Club podcast. We are beaming live from the studio this afternoon here in Texas, and today's show is going to be a wonderful show for all of you, my listeners. It's going to be a show in which we're diving into a wonderful topic today, where we're going to be helping majority of the medical practitioners here, showing them how to build long-term wealth in smart real estate investments. I'm your host today. My name is Ola Ibiwoye, and today we'll be diving into a step-by-step guide on how to become a real estate investor in apartments. Briefly, I'm just going to introduce certain aspects of this topic, but before I dive in, grab your coffee, grab your notebooks, your pen. You're going to want to take notes, okay? All right. Thank you for joining me once again here at the Commercial Property Club podcast. Whether you're looking for passive income, financial freedom, or a legacy for your family, apartment investing can be a game changer. But where do you start? That's most times the question. Where do you start? You start today. I'm breaking it down into actionable steps that you can take going forward that will help you get involved in apartment investments confidently as you move forward with your aspiration of being an investor in apartment. I got involved several years back, and it's been a wonderful journey for myself, and I'm encouraging my listeners also to take notes and tune into the insights that I'm about to share with you. I promise you by the end of this episode, you have a clear roadmap to get started in this wonderful way of investing in real estate. Let's dive deep right now. I'm going to consider number one step. Number one step is understanding why apartment investing is a great wealth building strategy. Why is it that apartment is a good tool to build wealth? Well, unlike your single family homes in real estate, apartments will generate multiple income streams, making them more resilient in economic downturns, recession period in the past few number of years back, in which we had a recession here in the States. We knew the apartment aspect of things did better than the single family. Then also to the financial benefits of the aspect of apartments makes it much more price jewel compared to your single family aspect of things, the cash flow aspect of things, the appreciation, the tax advantage, also to scalability would make it much better. The compelling statistics will obviously differentiate both sides of things. Did you know that some of the wealthiest investors that you would normally see on the tabloids are the focus mostly on multifamily investment, which is your apartment? They really would prefer to invest in such aspect of real estate because of the ability to generate consistent income. Step two. Education is everything. If you're trying to be an authority, or rather trying to beef up your expertise on something, you gotta educate yourself. So educate yourself in multifamily real estate. That's the next step I want us to look into right now. I'm going to recommend some books for you that would ultimately give you insight into the foundational education that you need when it comes to apartment real estate. Books like The ABCs of Real Estate Investing by Ken McElroy, and also to Multifamily Millions by David Lindahl. Those are good books that you can start with. if you understand the concepts of what is being explained in those books, those can give you foundational establishment when it comes to educating yourself in apartment investing. Then also too, listening to podcasts. Most of us commute to our jobs on a daily basis. Some of us drive as much as 30 minutes, 40 minutes. Those are times that you can listen to podcasts. Yes, one of the best podcasts out there that you can listen to is Bigger Pockets podcast. Some would explain terms like cap rate, capitalization rate, cash and cash return, your net operating incomes. With these are ratios and terms that you would need to understand as your foundational education when it comes to apartment investing. Understanding this term will help you analyze deals like a pro. And I also encourage you also to join networks of investors. Join local real clubs. What I mean by that is joining real estate meetups, online forums, learning from those who are already involved in the game. Those are invaluable ways of educating yourself, which is step number 2. What's step number 3? Step number 3 will be to define your investment goals. You got to define your investment goals. You have to highlight what in particular your strategies are going to be like. Now, once you map out your strategy, are you looking for passive income through long-term rentals, or are you interested in value-add properties where you can renovate and increase the rent or push up the rents and the leases on a property? Then also too, you can also consider your tolerance, your financial goals. These are crucial for you to know how much risk you're comfortable with and what your end goals are. Whether maybe you're trying to retire early, or maybe you're trying to include a supplemental income to what you already have right now with your W-2 income, or trying to build generational wealth. Now, having that as your third step really gets you into the thick of things, understanding now that you have your strategic goals mapped out. What will be your next step? Your next step is to build your financial foundation. Now, financial foundation in the sense that, sometimes you don't have to assume, you don't assume you need all the money yourself. There are several investors out there that can join you, or rather you can get yourself involved in options of creative financing with property owners. For example, as a physician, if you're much busy with your work at the hospital or your clinic, there are several loan programs out there that can consider the integrity of your practice. For example, if you have a practice and be willing to lend to you because of your strong credit status, a high credit score can get better loan terms, save you several thousands of dollars out there in probably your 4-star deal. Let's talk about the 5th step, having understand that choosing your market is also important. That's the next step I think I want to talk about. You got to choose which area you want to invest in, either the neck of the woods close to you, or rather you want to do something where there are management company that can take over and be your third-party managers for your property. Then also too, you have to consider several aspects of what will determine the kind of markets you want to get involved with. Factors like population growth, job growth, rent to price ratio, your landlord laws in those areas, because some areas are landlord friendlier than others. Then you also have to consider what kind of asset, or rather what kind of class of apartment are you going to get involved with, because there are several classes of apartment out there. You have your class A property, which are in the ranges of your luxurious apartment, your newly built, while your class B is the one next, those ones that were built in recent years to the class A are much newer. The class B are the next ones, and your class C are the next one to your class B, which are much older in terms of the numbers of years in which they were built. And those are the spectrum in which you can decide to say that, okay, I want to get myself involved in class A properties, or class B properties, or class C properties. You just have to understand that as you go through the classes, the lower you come, the more the renovations that will be involved. Like your class C property are much older properties, and those are your value add kind of property in which you renovate and bump up the rent, and sometimes they offer better returns. Your class A are much newer, which is no form of value add in terms of being new. Now, you also have to understand that, doing thorough research of your market is very important, like visiting websites like City Data, Neighborhood Scout, Yardi Matrix, providing valuable market insight as to which of the markets you're going to get involved with. Now, the next step will be step number 6. Build a team of professionals surrounding you that could complement your skill set. Team members like your real estate brokers, property managers, lenders, attorneys, and CPAs, and all these professionals come with you to form a team in order for you to have a H-free deal cycle, because every one of these people would have a pivotal role to play. Look for experienced multifamily deals. Actually, ask for referrals, interview multiple people before you arrive at a particular number of people that could be on your team, because practically you want people that will bring in skill set that will complement you, and also professional team members also too that would be specifically focused with you in your deal cycle, and will make it a smooth cycle and a very profitable cycle for you also too. Step number 7 will be analyzing your deals and running your numbers. I cannot but emphasize on how important that is for you. You got to analyze your numbers. Very important. I walk through simple analysis with good softwares, quick ways of evaluating your deals to see if your numbers would ultimately bring back the returns you're looking for. You got to discuss, or rather know, what your key metrics is all about. Understanding how to calculate net operating income, your cash and cash return, your debt service coverage ratio, just to ensure your profitability when it comes to the overall arching scheme of things in bringing back good returns on your investment. Your investment parameter. Remember, we talked about setting goals on what you really want, and those are the things that would practically make this come to fruition. So we've talked about several steps. We're going to move on to the next step, which is step number 8, financing your first deal, your first apartment investments. Well, the overview of financing options that you might have would be conventional loans, your seller finance. There may be several other ways actually in which you can fund your deals. Securing best loan terms would be very important when it comes to the confines of the details of your loan terms. Working with a mortgage broker, I would advise, is very important. A good mortgage broker, specific, most importantly in the areas in which you're willing to invest the market, and it could be a broker out of town also too, but brokers that are specialized in multifamily apartments that shop around also to know or get the best rates, get the best terms that will fit your particular deal. That's important also too. Now, let's move to the next step, which is making an offer and conducting your due diligence. You got to make that offer, then you do your due diligence. That's your step number 9 in this step-by-step that we're talking about when it comes to getting involved in apartment investment. So you got to be competitive when it comes to making your offer. You got to make offer based on your numbers, not on emotions. You cannot make offers based on emotions. You got to make it based on the numbers that you're working with. You got to include contingencies for financings. Then also too, your inspections are very, very important when it comes to due diligence. Key areas to focus on during your due diligence are reviewing your financial statement, inspecting the property thoroughly. You got to walk through the property and see what the units are made up of and see what needs to be fixed, see the state and the current situation of the units in your property, or rather the property that you're trying to make an offer for. Then analyzing the tenant lease also to avoid surprises. You got to look at those leases and make sure those leases are not just economic vacancy. And also too, you just have to do your due diligence, making sure that there are no hidden repairs that would spring surprise to you when you take over your property. Now let's talk about the 10th step: managing your investments for success. It's important that you manage your property very well. If you don't manage your property very well, your numbers would turn out to mean nothing. You got to stay with your business ideas, your outlines, your numbers. If you don't handle this properly, things could easily go south. A good deal could turn out to be a bad deal if you don't follow your business plan, and that's according to your underwriting, your financial analysis. Look into the maintenance issues, and also too, you got to hire the right managers to take over things if you're willing to get involved with a third party. That's if you're not going to do it by yourself. Now, I'm going to give us some tips on maximizing cash flow when it comes to managing your apartment investment. You got to implement value add strategies like upgrading units, improving amenities, reducing expenses, then also handling tenant relationships. Great tenants lead to stable income, providing excellent services, and screening thoroughly to avoid high turnover when it comes to your investment. So conclusively, we talked about 10 steps. Remember, we talked about 10 steps. All those steps are very important. You look at them decisively and follow them. We talked about your financial strategies. We talk about analyzing your market, the deal analysis. We talked about also making offer and doing your due diligence. Then also too, managing your property. Very important, so that the returns on your investment is valid and it comes right back to you. Well, Well, that's it. Those are the steps that you need to take when it comes to getting involved in apartment investing. Encourage you, start small, take consistent action, and keep learning. Keep learning. You got to keep educating yourself. The best time to start investing was yesterday. Another time that you could say is the best time to start is actually now. So to all of my listeners, here are some additional resources. You can visit my website, which is the parent company to Commercial Property Club, which is Estateserve Investments. Visit my website, which is www.estateserve.com for free resources. There's a lot of content there that you can catch up on. Also, too, I recommend also too good books earlier on during the show. Some of the books also too that I can recommend is Rich Dad Poor Dad book by Robert Kiyosaki. That's a good book also too. And several other books out there, and you just got to get involved with also good networking out there. So that's it for today. Thank you for tuning in to Commercial Property Club podcast. I'm your host, Ola Ibiwoye. If you find today's episode helpful, don't forget to subscribe on our YouTube channel, Commercial Property Club podcast. Leave a review, share with an investor out there, with a newbie out there, and don't forget to suggest any topic for us to cover next time. We can certainly do so. We help people right here with educating our viewers so that they can get into apartment investing. Connect with me also too on LinkedIn, Facebook, Instagram also too, or you can send me an email, ola.i@commercialpropertyclub.net. Until next time, good luck in your journey and keep making smart investment choices to build your financial future. The name is Ola Ibiwoye once again. Thank you.